What's going on, traders? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is April 27th, 2021. Please click the like button on this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today, we have a lot to talk about. I don't know what happened today. So we're going to go through the price action and the indices. We'll go into the hood and check out our sectors and style factors. We'll talk about some of my trades for the day, and I actually did a lot of de-risking today. And then we'll wrap up with some options order flow. Before we jump in, quick risk disclaimer, as always, nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account into any one of my trades. All right, so let's jump right in here. So we have the Fed meeting tomorrow. We had a bunch of earnings that came today. So we got a lot to cover. So it's April 27th. Let's check out these headline indices. For box scores today, we had the S&P 500 as measured by the SPY down 0.02%. We had the NASDAQ QQQ finish down 0.43%. We had the IWM small caps finish up 0.15%. We had the Dow Jones finish down 0.01%. Overall, today was just, a huge chop day. We're going to pull up our S&P, our ES futures. Yeah, you can see barely changed. We put in a doji candle, and, it looks like we're forming this sort of like cup and handle setup here. But we'll have to see how it plays out tomorrow with Fed Wednesday. And we did have earnings that came out from Microsoft, Pinterest, and Google today, and they were all a bit mixed. So we'll talk about that shortly. Let's pull up our NQ. NQ is actually down 0.45%. You can see very similar setup on the NQ. We are above this monthly value area. We're above all these key moving averages. We're actually a little bit extended from this 20-day simple moving average, but not nearly as much as we were, a week and a half ago. If we pull up our Russell RTY was a bit of a yo-yo today, so I actually closed out of my calls, pretty much right on the open. But you can see here we're right at this monthly value area high, and we'll have to see, if we end up breaking out or if this is a spot where we either consolidate or just kind of fall over a little bit. It doesn't really look like we have, a ton of power that's pushing us higher in those small caps. And then last but not least, let's look at the Dow Jones down 0.19%. You can see the Dow Jones really just moving sideways for the past 2 weeks, and that 20-day simple moving average is starting to catch up with price. So let's look under the hood. We're going to check out the breadth, and we're going to check out our heat map as well. And we're going to play from the current slide. Boom. So this, I think, is pretty key here. So breadth today was not the best. So we had S&P 500 with positive breadth, and then all the other indices had negative breadth. For me, and really, when you're trading just in general, you want to be allocating most of your risk when the odds are really stacked in your favor. Like when you just feel like, oh my gosh, the deck is so stacked, and this is just a great opportunity. Right now, what I started to see as I thought more today was this is actually a pretty difficult setup here to really thread this needle. So if you think about it, we had negative breadth, so that just decreases your odds right there. We have the FANG earnings coming up, which are going to be binary events, and I think they were really anyone's guess as to whether they were going to be positive or negative and how they would impact the market. And then we have the Federal Reserve meeting tomorrow. And, we already know James Bullard came out and said, hey, when 75% of the population is vaccinated, that's when I think it would be a good time to start tapering these asset purchases. We don't really know if tomorrow Jerome Powell is going to say, hey, yeah, I agree with that. Here's our schedule as to when we are going to start tapering. So there's just so many unknowns. And for that reason, I kind of see this as like, this is definitely not some sort of layup setup. And for that reason, I think a lot of traders, what they do wrong is they approach every single day the same exact way. Every single day they're trying to make money. And they're not really controlling their aggression. It's always just a constant level of aggression. And I think really to progress as a trader, I think a lot of it is just sort of like humbling yourself and being like, I don't know what's going to happen next, good or bad. So I have to take a little bit of a step back here. And I think the challenge when you're doing that is the thing that nobody wants to happen is, oh my gosh, I sold some of my stocks and then the market was up 1% the next day, or the market was up 50 basis points and everyone on Twitter caught it except for me. And I think that's what everybody really wants to avoid. So people are just like, Fed meeting tomorrow, whatever, like, I'm still all in. Like, you just kind of go with it. And then that's where you can really get yourself hurt. Because then what happens is, like, if you're always all in, as soon as the market has even the slightest little pullback, you suddenly have to be pulling in your risk, at the exact wrong moment. When you actually want to be buying, or, you just want to be more strategic, or really when those opportunities are arising. So can be very difficult. But yeah, that's my little rant. You can see, overall breadth negative. If we look at our heat map, you can see semis closed down for the most part. We had Google, which declined into the print. Google actually had a really nice print. Tesla reported earnings yesterday, and they were down 4.53% today. There were a couple of areas of strength. So if you look, the banks did okay. And then UPS and FedEx did very well. UPS reported earnings, and they had a really nice report. You can see energy did okay, and some of these reopening names. So definitely, like I was saying earlier, very mixed across the board. One thing specifically about the Tesla earnings. So Tesla, like I traded an iron condor on this, so I was betting for essentially like a non-movement. My trade is still, very much in play. But looking a little bit deeper at the earnings for Tesla, the only reason they're really profitable is because of the regulatory credits that they're receiving from the government. And not only that, in order to push themselves into profitability this quarter, they had to sell some of their Bitcoin and essentially monetize it. And using those profits from Bitcoin, that's how they were able to meet their quarterly target. So Tesla, to me that seems like very, very sketchy to say the least. Tesla is definitely one of these bellwether stocks for like the high growth, high price to sales, all those names, and that was down for today. If we look at our sectors, you can see here very mixed. And when I look at this, I'm like, I don't really see any common themes or rhyme or reason for really what happened today. A lot of times it'll be like, oh, well, everything that belongs in this specific style factor did this, or, everything small cap did this, or, there's a lot of like key themes. This is like, I don't know. It just seemed like, a smorgasbord of data. So like K-Web was up. These emerging markets, e-commerce names were up, home builders. But then we had profit taking in a lot of areas as well, like GDX down over 1%. The ARK ETF, solar names, which had been strong, down as well. If we look at our style factors, you can see the high beta style factor was up 0.82%. But then we had weakness in a bunch of other style factors. So this is, again, what I mean by, it's very tough to divine something from what these style factors did and also from what the sectors did. And then we also had weak breadth. So this is like, definitely, I don't feel like the deck is like stacked in my favor here. If we look at some of these earnings, and then I'll go to my trades. So I think this is, we had a couple catalysts this week, the FANG earnings and then the Fed meeting, which is tomorrow. Right after the bell, we did have a bunch of earnings come in. We had Microsoft, which reported earnings. From what I saw, it looked like everything was basically like in line with expectations. But apparently, they didn't really impress, because if you look at Microsoft after hours, they were down a couple percent, maybe like 3 or 4% here. I'll pull my hourly chart. Yeah, so you can see, on this hourly, the results definitely didn't impress. Microsoft actually had a really nice run into earnings. Pretty much all of these FANG names did have a nice run into the print. So yeah, this is just an example of like what happens, if they don't, really beat those expectations. So yeah, this is the hourly chart. You can see we hit this S1 level. I keep scratching myself because I just got a haircut today and I still have hair all over myself. Yeah, and speaking of haircut, I just noticed throughout the day not really a lot was going on. Everything was very slow. So I actually went to get a haircut around lunchtime, and I came back and pretty much everything was in the same exact spot that I left it. So yeah, Microsoft did not so great. And then Google, really exceeded expectations. So you can see Google is up about, I believe it's like 4%, and Microsoft's down 4%. So they're basically washing each other out in terms of the impact they're going to have on the S&P 500. And then Pinterest also reported earnings. Pinterest the past couple of quarters had really been just demolishing the analyst estimates, like pretty much embarrassing all these analysts. This quarter they came in much more in line. And you can see, so like everyone's expecting this name, like, oh my gosh, this company grows so fast, like these analysts can't even keep up. And then the analysts essentially caught up to Pinterest. So now you can see Pinterest is down about 10% after hours. So I would say, tomorrow we're going to have more of these earnings. Let me see who we have tomorrow. Oh, yeah, AMD reported after the bell as well. Let's see how AMD, what the reaction looks like there. Yeah, AMD looks like a positive reaction here, so that is a good thing. AMD, though, you can see it's not even near the prior all-time highs, though. So this is, it's getting a bump, but, after getting demolished over the past 2 months or so. So that is AMD. Tomorrow we're going to have more names. So tomorrow we have, we have a lot. Yeah, we have Shopify, we have Spotify. And then after the close, we have Facebook and Apple. So today was Microsoft and Google. Tomorrow is Facebook and Apple. So I think a lot of investors, including myself, when you think about how does this market get to 4,300 on the S&P 500, 4,400, 4,500, and I think going into this week, my expectation was, if somebody was to tell me, hey, the S&P 500 is at 4,500 2 weeks from now, what happened? I would probably say, man, all of the FANG stocks must have really crushed their earnings. So to see that we kind of went 1-1 today, that's like, all right, we washed out. And now we have Fed Wednesday tomorrow, where they're probably going to talk about tapering the asset purchases. So, I don't know. We'll have to see what happens. But for my trades for today, so let's see. I did a bunch of trades. I kind of switched my game up really about halfway through the day. So if we look here at 9:36, I closed out my IWM calls for $15.17. I'd paid $13.25. And I just said putting this in my pocket ahead of Fed Wednesday. Might roll into some common stock. I took some JP Morgan calls at 9:57. And then you'll see here, I took a couple of trades. So I got long JP Morgan. I got long Amazon. A call spread. Really is an earnings trade. I got long the May 7th 3,500 by 35.10 call spread for 343. And then I also got long GDRX as well. There was actually some news that came out about GDRX, and it should help them expand their TAM. Right now they do drug couponing, but it's only for generic drugs. And I think they might be expanding into non-generics as well. GoodRx, I bought some October calls. I tried to push them out with a 45 strike. So we'll see what happens with GoodRx. But yeah, in the morning, I put on a couple of trades. So I was like, okay, I'm going for it here. Let's see what happens. Then on the stock side, this is today. So I took some Carvana off the open. That was a setup that I just saw forming in the pre-market. So I was like, I'll give it a shot. I closed out my ZIM. ZIM was, pretty much like a perfect little entry for me. So this is like, swing trading. What does the happy path look like? That for me was ZIM. So ZIM, I entered literally on this red candle, like very close to the bottom, maybe like somewhere in this wick. And then it was like day one, boom, nice little green candle. Day two, boom again. Day three, boom. Day four. So for ZIM, it opened up, pretty strong and actually rallied up. And I was like, ZIM, I feel like there's more risk here than reward given how extended we are. So yeah, I closed out. Nice trade location on my close. I got out for $35.25. I'd paid $29 for it. So for me, that's like, all right, that's a good trade. That can actually finance a couple of other trades. And it can also finance, some losing trades. You take those profits. That one was about a 20% winner. Say if my max risk on a trade is like 5%, I just financed, 4 trades there. So, that was a really nice excursion. I closed out my Neo common shares for $41.80. The remaining piece I'd paid $40.85. I stopped out of Vuzi. I'd paid $24.56. Closed that one out for $23.68. And yeah, this was sort of like early afternoon, just doing some trading. I started to really think about the setup into the next couple of days, and I was like, I want to just make sure I'm coming in a bit lighter because I don't know what's going to happen. So like I still want to come in long because that's in line with the prevailing market trend, but I want to make sure I'm taking my exposure down. So I closed out my FFNTF common shares, essentially a scratch. I made a penny on a $1.29 investment. I closed out my SE common shares for a nice winner. I had paid $254.11, closed that out for $269.43. Carvana closed out for a very tiny winner, a couple cents here. And I just said didn't get any move on this one, not worth taking it into Fed Wednesday for me. Same thing with the options. Like, this is one thing that I noticed. These are my last couple exits, but one thing I noticed, like in the morning, I entered maybe like 3 or 4 trades. This is sort of what happened to me this morning. And I think if you've been trading for a while, you might know what I mean. You might do this as well, and you might not even know that you do it. So the market was pretty slow today. It was like a non-trending day, really just chop back and forth, etc., etc. It's very slow. There's not much to really look at. One of those days where you may as well just walk away from the keyboard and you're likely better off because you're not really going to make much progress. Sometimes during those days, I'll put a trade on, say at like 9:35, and then all of a sudden I'm like, not really making any progress on it. I'm going to put on another trade, and it's like 9:55, and then it's like, all right, well, I'm still not getting any traction. I'm putting on another one, and on a slow day, you can end up putting on, a ton of options risk or just a ton of new trades that on a slow day like that, honestly, for the most part, unless you see like an incredible setup, that's probably not the ideal time. So yeah, I noticed I sort of did that this morning where I put on maybe like 3 or 4 trades and I was like, no, I don't want, all this risk. Yeah, so GoodRx I kept on. JPM closed those out for a perfect scratch. And then I closed out, I had a Baidu call spread. It was a weekly call spread that I closed out for 86 cents. I had paid $2.54 for that one. And I was like, you know what, it's not really the correct setup to be taking, like weekly calls into this. So I was like, I'll just take my 86 cents. I'll allocate it to a new trade. So yeah, by the end of the day, I'd raised, I may be in about like 31% cash right now. So now I actually feel a lot more comfortable where, Fed Wednesday just goes off without a hitch. That's great. I'm long. But if there is some sort of hiccup, I'm not going to be like, oh my gosh, like I'm not going to be like hoping and praying for a good outcome. And I think as a trader, that's really the spot that you want to exist in. As a trader, there are going to be times, and I do this a lot as well, where you put yourself out there and you do put your pedal to the metal and you allocate a lot of risk, but it's just not always that time. And for me personally, for other people, maybe they're finding a lot of setups today, and they know which way the Fed meeting is going to go, and they have like predicted it all, or I don't really know, but yeah, for me, I'm not smart enough for that. So yeah, let's see, and then really quick, I'll pull up our options order flow, and that should only be like a minute. So yeah, let's take a look here. So we had some Tesla call flow, and like I was saying earlier, Tesla ended up closing on the day down about 4.5%. You can see we had some SPY hedges going up periodically throughout the day, and that kind of makes sense given all these binary events we've been talking about. CCIV, that one's actually catching my eye. You can see we had some FANG flow as well. Let's take a look at CCIV. Wow, yeah, CCIV, some call flow coming in, but yeah, that chart looks ugly. That is not one that I can really, that doesn't really meet any of my setups. But with that being said, not really all that much on the options order flow today. Hope you all had an awesome trading day. Tomorrow is going to be action-packed, so be ready, and I will see you all in our pre-market session tomorrow.